Hi, my name is Transmile and today I will be talking about the company profile for Transmile Group Berhad. Transmile Group Berhad was a well-known Malaysian air freight and logistic company. It was established in November 1993 and it quickly became a leader in regional air and cargo services. The company was listed on Bursa Malaysia in 1997. However, it was later delisted in 2011 after a major financial scandal. Transmile Group Berhad was founded by Gan Woon Aun. It specializes in cargo transportation and operated aircraft such as Boeing 737s and Cessna Caravans. It provided services like express mails, courier and freight delivery for major clients including DHL, UPS and Post Malaysia. In addition to that, the company also handled aircraft maintenance, repair and ground handling services at its main hub in Subang. However, in 2007, a major issue was discovered. Transmile had overstated its revenue and profits by reporting financial sales since 2004. This was done to make the company's financial performance appear stronger than it actually was. This scandal eventually led to a loss of investors' trust and company's downfall. Now I will explain the corporate structure of Transmile Group Berhad. The company had several subsidiaries supporting its operation. In terms of management, the founder and CEO was Gan Woon Aun. A key investor in the company was Trinity Coral Sdn Berhad, which held a significant stake in the company. The board of directors included independent and non-executive directors. However, during the financial scandal, the board was criticized for weak oversight, which contributed to the company's governance issues. Overall, while the company structure appeared well organized and extensive, weakness in control and monitoring led to major problems. Lastly, I will talk about the corporate governance and SCR issues of Transmile Group Berhad. Firstly, the company had weak internal controls. This means there were not enough proper systems in place to detect error or fraud, allowing the issue to go unnoticed for several years. Secondly, there were concerns about auditor independence and competence. The external auditor were criticized for failing to detect the fraud. Their long-term relationship with the company may have affected their objectivity, and they also faced difficulties obtaining important documents. Another major issue was fabricated transaction. The company created fake sales transaction between its subsidiary and multiple customers, along with unsupported payments totaling around 189 million ringgit. In addition, there was accounting fraud involving revenue overstatement. A special audit by Morse Rowland revealed that the company overstated its revenue by approximately 622 million ringgit between 2004 and 2006. Lastly, there was a failure in board oversight. The board of directors did not properly monitor management, and the audit committee allowed misleading, unaudited financial statements to be released despite the warnings. Overall, this governance weakness and lack of accountability were key factors that led to the company's major financial scandal.
Now I will explain the role of the auditor in the Transmile Group Berhad case. First, the external auditor, which is Deloitte and Touch, is responsible for three key areas. The first is fraud detection and reporting. Auditors are not primarily fraud hunters, but they must assess the risk of material misstatement due to fraud. In this case, Deloitte failed to detect a massive revenue overstatement of 622 million ringgit, which clearly indicates a failure in applying sufficient audit procedures like revenue, testing and confirmation. Second is regulatory compliance. Auditors must ensure that financial statements comply with accounting standards such as IFRS or local standards. If revenue is inflated, it means the financial statements are not fairly presented, which is a serious breach. Third is financial statement audit. This involves verifying whether the financial statement give a true and fair view. Deloitte issued audit opinion over multiple years without detecting the issue, which raised concerns about audit quality and professional skepticism. Because of these failures, a special auditor, Maurice Roland, was appointed. Their responsibility was to conduct a forensic investigation. This is more detailed than a normal audit. It focused on identifying fraud, tracing transaction, and finding out who is responsible. Their investigation eventually revealed significant accounting irregularities. So overall, this case shows a clear breakdown in both audit execution and audit independence.
Alright, I'll now move on to the key issues and their implications in the Transmile scandal. Starting with the issues, first, accounting fraud and revenue inflation. Transmile overstated its revenue by recording income that did not actually exist, which allowed the company to turn real losses into reported profits. This gave a misleading impression of strong financial performance. This fraud also involved fictitious transaction and manipulation of receivables. Secondly, weak internal controls and oversight. The board of directors and audit committee failed to properly monitor the company's activities and relied too heavily on senior management. As a result, warning signs were overlooked, and the fraud continued for a long period. Third, auditor independence and competence. The external auditor, Deloitte and Touch, had a long relationship with the company, which raised concerns about familiarity traits. There were also questions about whether sufficient professional skepticism was applied, as the irregularities were not detected early. Now moving on to the implications. First, shareholders' losses and stock collapse. When the fraud was exposed, the company's share price dropped sharply from 14 ringgit 40 sen to below 50 sen, causing significant losses to investors. Second, delisting and business collapse. Transmile was eventually delisted from Bursa Malaysia in 2011, and its core business was sold off, marking the downfall of the company. Finally, erosion of public confidence. The scandal damaged trust in financial reporting and raised serious concerns about corporate governance and the reliability of audits in Malaysia. Overall, this case clearly shows how failures in governance, auditing, and ethics can lead to serious consequences for both the company and the wider market. Now, I will go through the recommendation based on Transmile case. Firstly, strengthening corporate governance. The company needs to ensure that the board of directors plays a more active and independent role in overseeing management. Strong governance is important to prevent abuse of power and to ensure accountability at the top level. Second, improving audit committee effectiveness. The audit committee should be more proactive in reviewing financial reports and challenging management decisions. They must also act independently and ensure that any red flags raised by the auditors are properly investigated and not ignored. Third, enhancing internal control systems. The company should strengthen its internal controls by implementing stricter approval process, regular internal audits, and better monitoring systems. This can help detect irregularities earlier and reduce the risk of frauds. Fourth, improving external audit quality. External auditors should maintain independence and apply a high level of professional skepticism. Regular rotation of audit partners and more through audit procedure can help improve audit effectiveness. Lastly, increasing transparency and disclosure. The company should provide more accurate and timely financial information to stakeholders. Better transparency helps build investor confidence and reduce the risk of misleading reporting. Overall, these recommendations aim to strengthen governance, improve accountability, and restore trust in financial reporting.
So, for the reflection, the Transmile Group Berhad scandal taught me that a company's success is not just about making profit, but also being honest and responsible. In the case of Transmile Group Berhad, the financial statements were manipulated, which caused big losses to the investors and the company's reputation. I also learned that management plays a very important role. Leaders like Gan Boon On and Ng Chin Hui should act with integrity because their decisions affect many people. From this case, I understand that auditors must always be careful and not fully trust what is given to them. They need to check everything properly. Overall, this case reminds me that honesty, strong governance, and accurate reporting are very important for a company to succeed in a long term. That's all from us. Thank you so much.